We are in the middle of an economic recession, and the Bay Area housing market is in a free fall. But how bad will it get? Coming up on this Silicon Valley Snapshot. My gosh, I take off to Europe for a couple of weeks during the summer, and all of a sudden the market just decides to implode. And, it's something that we should remember, especially when things get better and we move on from this little epitaph here, that when things change in the housing market, they change quickly. And it's all sunshines and rainbows until it's not. And this should be a lesson to all of us that the next time things are good, don't take it for granted, because things could change literally in a matter of weeks, if not days. And so it happened in April. Things changed like literally in about a week, and it could happen again. So let's not forget that moving forward. But the data is in for the month of June in 2022. Things are not looking so good for the housing market right now. We're in the middle of July, and we're going to get into those numbers right now. We're going to dissect the data. But before we do that, if you are a home buyer in today's marketplace and you're trying to make the most educated decision possible, you're going to want the most relevant, up-to-date market stats, and you can text the word data plus the zip code, the neighborhood, or the area that you're looking in, and we will get that information sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out, well, number one, what should I price my property for? Number two, what's my property even worth in this shifting market? Great question. You're going to get all of that information and more when you text the word data plus your property address to the number down below. So let's hop right into the data, starting off with Santa Clara County. In Santa Clara County in June, we saw a 43% increase year over year in inventory levels. That is a fairly dramatic increase in inventory year over year, with pendings dropping 41% over year. That's a 83-point spread year over year, which is a lot. And it's going to take some time for all of us to recalibrate ourselves to the new marketplace. It's not what we were in before. And now this is the moment. This is the moment of opportunity when sellers' expectations are not in alignment with reality. As a home buyer, these are the moments when, in a declining market, when you can find windows of opportunity to find a seller that maybe is a little less educated, a little less informed as to what's happening, because a great agent like me would be able to educate my seller and let them know that right now is not the time to panic. Your home still has value, but not every agent understands that, and not every agent is educating their sellers and letting them know that it's okay that your home's been on the market for 3 weeks. Just let's let the market come to us. Let's allow the marketing to do its job. If you are a seller, that should be your mindset. Okay, so you're watching this video, you are in the know. You now have insider information. But if you are a buyer and you are looking for windows of opportunity in this kind of market where expectations and reality are no longer in alignment, this is the time where you can find great deals. This will not be the case forever. Flipping over to San Mateo County. In San Mateo County, inventory levels are up 40% year over year. Pending sales demand is down 29% year over year. Now, if you look at this graph, you'll notice that for the last 2 months, May, June, we've had a leveling off of pending activity, which means pendings are no longer in a free fall. When you look at what's going on in Santa Clara County, pendings are still on the decline, meaning demand is still recalibrating to the new market conditions. But in San Mateo County, seemingly, we are now seeing like an equilibrium, more of a leveling off of pending activity. Now, inventory is still rising, but pending activity seems to be leveling off. Heading down to the Santa Cruz area, we see 43% increase in inventory levels and a 36.4% decrease in pending sales. That is quite a dramatic swing. We're looking at approximately a 80-point swing in activity level year over year, which if you're in the moment, again, as a seller, you last year saw your neighbor, or even 3 months ago, saw your neighbor sell in like a week. And now your home's been sitting on the market for like a month and you've had no offers and you're thinking, well, what's wrong? Well, the market's shifting, the market's recalibrating. But here's the good news. Homes are still selling. And that's what we need to remind ourselves here. Like, let's not panic. It's not like no homes are selling. That's not the case. Homes are taking longer to sell because there's more available and demand is dropping off a little bit. But this was bound to happen. for many reasons. Number one, rates have gone up a lot. Number two, we are in a bear market right now. And number three, we have gone through perhaps one of the greatest inflationary periods of all time, and none more so than the housing market. The housing market has become hyperinflated, and it's only a matter of time before this happens. But the good news is homes are still selling. Buyers are still out there. There might be less of them, but buyers are still out there, and there are still great homes for sale. That's the good news. When we look at San Benito County, we see an increase in inventory levels year over year of 51% and a decrease in pending activity of 36%. That is nearly a 90-point swing year over year. That is, again, we're seeing this almost in every single county where we're looking at a 70 to 90-point swing activity levels year over year. There's no way to sugarcoat it. The market conditions are not what they used to be. And especially in an area like San Benito, where, as I've said in previous videos, San Benito is a secondary market. So when things are good in Santa Clara County and San Mateo County, things are great in San Benito County. But when things are not so great in Santa Clara County, San Mateo County, places like San Benito County tend to get the worst of it. And so the volatility that happens in these secondary marketplaces tends to be a lot higher, simply due to the fact that it feeds off of what's going on in the primary counties such as Santa Clara, San Mateo, and so on. Shooting on up to San Francisco, we are seeing a 27% increase in inventory levels year over year and a 32-point drop in pending activity year over year. Now, not as dramatic. These numbers aren't as dramatic as they were in Santa Clara County and San Mateo County and pretty much everywhere else that we've looked at. But one thing to remember here is that it already wasn't that great in San Francisco. And so we're looking at this essentially 60-point swing in a negative direction for San Francisco in what was already a B minus C plus market to begin with. So we're really starting to see the negative effects of all of the happenings, the interest rates, the bear market, the inflation, all of that's hitting the San Francisco market. And for the first time ever in a long time, we're actually seeing the single family sector in San Francisco suffer alongside the condo, the TIC, all of the other units. The single family sector in San Francisco has been very healthy and has been a strong seller's market for many, many months, almost a year and a half now. And that's also started to become impacted. That sector has become impacted as well in San Francisco. So let's continue to keep an eye on that as well as we move on into the fall and winter months here of 2022. Now, flipping over to Alameda County. Alameda County, we are seeing a 59% increase in inventory levels year over year and a 35% decrease in pending activity year over year. That's a 95-point swing in activity level year over year in Alameda County. And then finally in Contra Costa County, which was, if you remember, the darling of the bull market that we saw, the bull housing market that we saw here in the Bay Area over the last 24 months. If there was one county that really benefited from the last 2 years, it was Contra Costa County. It's no longer the darling. It is getting hit really hard right now. 68.4% increase in inventory levels and a 31.6% decrease in pending activity, effectively a 100-point swing in activity levels in Contra Costa County, making it the hardest hit county so far. But the faster they rise, the greater they rise, the harder they fall. And that's exactly what's happened with Contra Costa County. It was so good for so long, it was bound to fall, and it's getting hit the hardest because it rose the furthest during this bull market. And now during this bear market, boom, it is getting hit and hammered really hard. I hate to be the bearer of bad news, but this is very unbiased, just straight to the point information. And that's what I'm here to deliver. The good, the bad, the ugly, the truth. And that's why you watch the Silicon Valley Snapshot. But coming back to the question that I posed at the beginning of the video, how long will this last? Well, there actually is some good news in some of the data that we've seen here. And so I want to rewind to Santa Clara County. In Santa Clara County in June, we saw a 43% increase in inventory levels and a 41% decrease in pending activity. But if we look at the month to date numbers here, we're halfway through July. If we look at the month-to-date numbers in July, year over year, what we're seeing is actually a leveling off in both the increase in inventory levels and the decrease in pending activity. So we're actually seeing inventory levels, they're still up year over year, but only 34% as opposed to 43%. So we're seeing inventory levels year over year coming down a little bit, which is a good thing. And pending activity is only down 34.5% month to date year over year, as opposed to 41% year over year in June. So we're seeing pending activity start to creep up just a little bit. So the market's reacting right now in real time, and we're starting to see those lines come together. Obviously, we want to start to see things start to come back together, both the inventory pull back a little bit, activity level ramp up. So this is some really, it's too early to tell if this is the beginning of the rebound, but it's a positive initial sign here in Santa Clara County. And flipping over to Santa Cruz County, we're seeing a very similar, actually a more drastic rebounding, if you will, in the market, where 43% increase in inventory levels year over year in June. We're only seeing 21% increase in inventory levels month to date year over year in July. And same thing with pendings. Pendings were down 36% year over year in June. They're only down 21.4% month to date year over year in July. So good signs here in Santa Clara County and Santa Cruz County. Now, looking at Contra Costa County, nothing's changing. We're seeing almost identical numbers. So a leveling off. The good news is we're not seeing more drastic numbers come, like, 70 or 80% increase in inventory levels year over year. We're not seeing pendings dip that much more than they were. So it's a leveling off, which is also a positive sign. It means that there's more carnage, more damage isn't really being done. It's staying consistent. And if we look at Alameda County as well, we're seeing almost the exact same thing with Contra Costa County, where the inventory levels year over year, month to date, that's at 59.8%, which is fairly identical to what we saw in June year over year, which is a 59.1 increase. And again, pending activity down just a little bit more than it was in June. So practically identical, which means, again, we're seeing like a leveling off in both inventory as well as demand. Again, not positive news for the East Bay, but it's also not negative news either. There's a leveling off, but definitely some early signs of perhaps a leveling off, both when it comes to the increase in inventory levels as well as the decrease in demand here in the Bay Area. If you've made it this far in the video and you're not subscribed yet, what are you waiting for? Click the subscribe button, hit the notification bell, give us a thumbs up. It costs you nothing. You'll get to see us pop up in your newsfeed over and over and over again. And also, it helps me get in front of more people just like you, because more people need to hear this messaging. The media is full of fear-mongering right now, and there's no reason to be afraid about what's happening in the real estate market right now. The market, yes, it's dropping, but is it in a free fall? Absolutely not. Are we going to see a correction of 20, 30, 40%? Very, very, very unlikely, especially given what we're seeing right now, already early signs of stability coming back into the marketplace after a few months of volatility. We're starting to see some early signs of stability, and that is a good thing. Whether you're a buyer or a seller, that's a very, very, very good thing. So give us a thumbs up. And as a token of my appreciation, if you text the word free shirt to the number down below, we'll send you a free Selling Silicon Valley swag shirt for your support. It really means the world to me. This is Danny Gould. I'm Selling Silicon Valley, and I will catch all of you in the next video.